Randy, always good to have you. Anything we should be looking out for in these nomination hearings? You know, there's been certainly some talk about Sarah Bloom Raskin and some of the work that she's done in various areas that perhaps is going to raise the hackles of certain members of that committee.
I think that's probably the focus of the questions will be her views on regulation, and in particular views around climate change, whether it's a risk management issue, what role she thinks that regulators should play in allocating capital. I think she's been pretty clear that she doesn't think that should be the main thing that they do, but I think that'll be one of the questions.
Yeah. What do you think overall of the nominees and the idea that they perhaps are going to bring some diversity to the board?
That's exactly right. I mean, it's pretty obvious, and I think these are people who have experience either on the academic side or on the policy side, and have thought about monetary policy and regulatory issues. So they're people with strong backgrounds.
Hey, Randy, I do wonder how you think climate is going to fare as an issue over the medium term, because Powell has said it is a priority. But Yellen said it's too early to adjust capital requirements because of it. In terms of bank risk, Toomey is not hot on Raskin because of climate. I mean, we're going to be struggling with this for a while, it seems.
Oh, for sure. Central banks around the world have been struggling with this because you want to take into account the risks, because, of course, that's what bank regulators are supposed to be doing, making sure that the banks are thinking about risks both short-term and long-term. But how far do you want to go in being a nudge, or even something that's more than a nudge, to get banks to allocate capital in different directions? And I think that's exactly where the play is going to be. They're going to try to figure out how much there is going to be wanting to nudge versus direct.
Yeah, Randy, I mean, there's a lot of central bank news today. Obviously, the testimony of these nominees in front of the Senate today here in the U.S., but also you got the Bank of England raising its key rate. Again, you've got the ECB and Lagarde basically refusing to rule out a 2022 rate hike. Maybe not so hawkish yet, but certainly shifting from what has been a very dovish stance as well. I guess just looking across the globe, can we now say that we're moving into more of a synchronized tightening cycle, maybe excluding China?
I think you're exactly right. So we're starting to see a little bit, just a baby step of the ECB pivot. They've got to move, just like the Fed moved quite significantly over the last 3 months. You know, 3 months ago, we were hearing about transitory and providing support. Now, they've really kind of gotten religion, and they're going to be moving on inflation. Bank of England moved up for a second time in 2 meetings, and 4 of the 5 members actually had voted for a 50 basis point increase rather than just a 25 basis point increase. So that's a clear signal that they're going to be moving faster. The ECB has been slow, but now they have said, okay, we're not going to rule out an interest rate rise. And I think they're going to get probably a couple of them, or at least a significant degree of tightening beyond what they had said even just a month ago, because inflation is very high and is going to be persistent in the Eurozone.
Finally, Randy, jobs number tomorrow. The consensus is still positive, but you had probably 20 million Americans who at some point during the month couldn't work, and a large percentage of those people were not paid and won't be counted as employed. How does the market keep their eye on the longer-term trend after what could be a tough print?
I think that's exactly right. We've got to look through this. I mean, we've had some prints that were kind of low, but it wasn't because the job market was weak. It's because it was strong, and firms couldn't attract enough workers in. With the variant disrupting things, that's not going to change the Fed's view. The Fed's view is that the labor market is very strong. We see very high quit rates. We see wages going up quite significantly. So I think regardless of what the number is tomorrow, they're going to look through that, say that's just an Omicron thing, and that the labor market is strong. They're on the path to raising rates or some form of tightening. I'd say the vast majority of the meetings they have for the rest of the year.